All right. Good morning, everybody. I'm watching this NASDAQ fight at areas. Look at the decisions being made. Pretty awesome. How you guys doing today? Bum, bum, bum. Whoops. No, I don't want to set up my new Chrome profile. My... Hold on one second. My internet's going nuts. Here we go. All right. Bum, bum, bum. And now we're getting there. Sorry, guys. I'm like a little discombobulated. All right, now I'm getting there. Cool. Good morning, good morning. I swear I can do this. Um, Welcome to the class, guys. Good to see you. Hope everybody's doing well today. Um, I'm excited about the day. Bummer of a morning, not a lot of opportunities for me, but that's okay. Sometimes they're great, sometimes they're not. You never know what's going to happen. Um, So you just take what the market gives you. One of the things that we did have today was news at 8:30. Kind of a bummer. Didn't do what we wanted it to do. Barely moved the markets. Didn't get a whole lot done. I was really hoping that it would bounce and shake it up and do all that great stuff, but it didn't. But I still check the news every day, guys. 8:30 a.m. today we had the GDP, whatever that is. 10:30 a.m. if you're a crude trader. We've got crude oil inventories. This is where they kind of make their decisions about the reserves and what they're going to do. And then that's really it for today. But every morning I like to go to forexfactory.com/calendar. Good morning, Ed, Gary, Michael, Ron, and just check it out and make sure that everything is kind of the way it needs to be. Hey, good morning, MB. Nice to see you. I was quoting you earlier today. And then, guys, everything that we talk about here, and I can't stress this enough, we give you everything that you need right here in the 101 class. We're going to build a foundation. We're going to talk about the best of the best, the highest probability. Going to give you a set of rules. I'm going to provide you a plan. I'm going to make sure that you know exactly what it is that you're looking for. And everything that we talk about in here, you can find in the tutorial section right off the education page. I'll give it to you. It's the user guide. Um, but our focus in this classroom, guys, for the first hour every day is we're going to talk about a high probability trade. We're going to talk about a trade that typically wins more than it loses, 70 to 80%. This is a trade where every indicator on every chart is going to agree for the trade. This is where you're going to have your strongest triggers with nothing in the way. And guys, I'm telling you, this is your foundation trade. This is the trade that sets you up for success as a brand new user or somebody looking for consistency. Because what this trade does for you is it turns you into a chart reader. There we go. And a chart reader is somebody that can look at the charts, look at your workspace, and guys, you're all going to understand fluently within the first week or two. You're going to understand where the market is likely to continue, and this becomes your entry point for the highest probability trend trades. You're going to understand where the market is likely to go, and this is going to help you with your profit taking. And then you're also going to understand where the market is likely to stop. And I think that you can't over stress the importance of understanding these likely to stop areas. Areas where the market are likely to stop, these are areas that can reverse the market. And if you look at NASDAQ's been in a big grind all day, but these yellow dots that none of the triggers broke through, guys, this is a likely to stop area. And look at the reaction coming off of it. And if you go back to where did it start from? It started right here at these big blue lines with nothing, no trigger lines below it. Guys, these are likely to stop areas, and when you know where they are, you don't trade into them. You don't get caught trying to trade into an area that may end the trend. Good morning, Safia. And then the amazing thing is when these do reverse the market, it creates the conditions for the highest probability trend trade that we can take. Um, and that's what we're going to look at today. We're going to take a lot of time to look at the high probability. We're going to go through and become chart readers. And we're going to do it with a high probability trend trade, guys. It's going with the trend. It's going with the direction, momentum, everything. It gives you warm fuzzies because every chart agrees with the trade. And there's only three rules on this trade, guys. There are three rules that provide three advantages. And let me stress, it's so important that you understand this. This isn't the end of the road for you. This isn't the only trade that you ever have to take, but this is the one that's going to teach you to read your charts. And I got to tell you, once you can read your charts, guys, everything falls into place. So three rules providing three advantages. And the recipe for a trade is nothing more than momentum, a clear path, and an entry area. And when you have these three advantages, it's time to pull the triggers. When you don't have these three advantages, guys, that's your 90% of the day. 90% of the day is reading your indicators, waiting for these advantages. 10% is pulling the trigger when the advantages are in place. And that's what we talk about for the first hour, the rules for that. And these three rules happen on only two charts. Um, why complicate things, right? You're going to use a large chart. Large chart's going to lead the way. Large chart is going to tell you exactly what the people in charge of the market want to have happen. The large chart is going to define the direction of the market, letting you know whether you're going up or down. Hey, good morning, Chef. The large chart's going to define the momentum of the market, making sure that you have favorable momentum, that market is pushing strong in the direction. And then finally, it's going to define areas. It's going to let you know where those likely to stop areas are so that you don't trade into them. So you're not taking trades into this giant brick wall that may reverse the market. All of this happens on your large chart, one chart, and it really happens on the most current bar of the large chart. It's a broad stroke of a brush, and you get all this information from one bar. Rule number one happens on the large chart, and when it's true, you will have the advantage of momentum, a market that's likely to push in the direction of the trend. Rule number two, when true, gives you a clear path, nothing between you and your target. And then once these rules are true, you're going to turn to a small chart, a faster chart. And guys, this really becomes a refinement chart. You're going to take that one bar on the large chart, and what it's going to do is you're going to whittle it down and you're going to break it down into about 15 to 30 different bars. And by doing so, you're going to be able to pinpoint exactly where the market is likely to continue. You're going to be able to use that for your entry, and that's what rule number three is going to do for you. So, three rules, two charts. This is the first hour of every class, guys. I am a broken record. And this is the other part of my broken record. This is your path to getting to where you want to be. I know that I have new people in the room. I know that there's a lot of you that are excited about being successful day traders. Build your foundation, get your reps in, understand the looks. And the easiest way to do that is by posting your trades in class, guys. Everything that you do, every time you post a trade or every time you take a trade, put it in the room. Let's talk about it. That's what the room is for. This room is designed to give you feedback on anything and everything that you see to make sure that you're seeing it clearly. Um, the only way that I can't help you, the only way that I can't fix your mistakes is if you don't give me the opportunity by posting in class. And then next, use the spreadsheet that Nexgen provided you. It's in your Nexgen Study Picks folder. Guys, this is your trade journal. Even the CME on their website, when people are becoming day traders, that's the first thing that they say. They're like, hey, keep a journal. Know what you're doing. So Nexgen built one for you. And this one talks about the trades that you take, the conditions that were met, that weren't met. It talks about your win or your loss. And then it has a section in notes, guys, and this notes section should be the feedback that you receive on the trade. So if you trade without the advantage of momentum, that you should write that in the notes. If you traded into a termination condition, you should write that into the notes because what you're doing is you're recognizing these patterns, these patterns that you've created in your own trading that are either bringing you success or they're taking success from you. And that's really the magic of what the classroom is we identify these patterns together, then work together to get over them or to reinforce them, to encourage them so that you stick with it. But if you take 5 minutes with your first cup of coffee, hot tea, whatever you do in the morning, and you just review yesterday's trades and you ask yourself the simple questions: what worked? What didn't work? What made me nervous? What kept me relaxed? You're going to set yourself up for the day, guys. You're going to give yourself something to focus on in the day, and you will accelerate the learning process. So don't be afraid to use this spreadsheet. First page is your trade journal. Second trade or page is everything that it's going to take to get you into the market. This is my perfect look. So I'm going to start a chronicle of pictures of what my perfect look looks like. And this is very important because recognition very much comes through repetition. And then finally on the third page is kind of my gift to you here, guys. This is 275 pictures-ish of next-gen users using the software, getting in and out of the market, taking those advantages and turning them into a trade that suits their needs. But this becomes an outstanding study guide because if you go through these pictures, you begin to notice that pretty much every trade embraces the idea of momentum without stuff in the way and great entries. And it's just kind of everybody's take on it. There's also things on NASDAQ, management, patterns that repeat themselves, because that's all we're trading, guys, is patterns. It's not that I'm trading the S&P or the NASDAQ. I'm trading patterns that happen to be on the S&P, that happen to be on NASDAQ. And you'll find that these patterns repeat themselves on pretty much any market that you want to trade, whether it's stocks, options, futures, and a whole section dedicated to termination conditions. Guys, embrace the spreadsheet. Use it daily, and I'm going to give you a copy of mine just in case the one on the website isn't as updated, but you do have a version in your Next Gen Study Picks folder. But I just dropped mine in the room. Please feel free to steal it. And then we're just going to focus. We're going to learn the trigger lines for when it's okay to trade. That is really the first thing that we're going to do, guys. We're just going to talk about the rules to identify the advantages visually, and then to associate the words of the rules with the look. And it's going to be imperative that you start writing those rules on your chart. Every time you take a trade, I need you to tell me why. Why did you do what you did? What was your advantage? What made you feel like that long trade was the right long trade? Because what this does for you is one, it gives you a visual of what your train of thought was. I always tell people if you think that you're following your rules but you're losing a lot, videotape one of your trades and talk yourself through it. You'll be amazed at what you justified just so that you can get into the market. So if you're writing down why you did what you did, well, the background was green, so I went long. You may realize that you're omitting some very important things. I want to see where you get in. I want to see where you get out. And I want you to always give me the whys. And there are no wrong answers. Can't stress that enough. You can't be wrong on your reading of the charts, right? Because it's what you're reading, it's what you're seeing. But we may need to work together to change the way you read your charts to make sure that you're getting the right information, the best information out of these indicators. So as we learn the rules, make sure that you're simulating, posting your pictures in class. Embrace the recipe for annotating a chart, guys. It's difficult when you guys put charts in that don't make sense. The trades fight everything, and you refuse to tell me why you did what you did. And the same goes, if you're just showing off, that's cool. Email them to me. I'll high five you virtually all day long. Keep it educational, and you writing on the charts does that. Um, we are going to simplify, guys. We're going to focus on that high probability trend trade, and then I'm going to introduce you to a medium probability trend trade as well, and it's a trade that we call a 50-50 trade. It has nothing to do with the chances of success. 50-50 doesn't mean, you might win. It has a lot to do with forfeiting one of the advantages. So we're going to focus on two trades. That's it. I'm even going to give you a plan how to take them in the best fashion. What you need to do is you got to learn those looks, guys. You got to take those pictures. You got to commit to taking pictures of the best looks so that you can repeat every day, so you can find what you're looking for every day. And then that's where filling out the spreadsheet is imperative, guys. The more pictures you take, I always tell people commit to 15 pictures a day. That's such a low number. I've already taken about 40 today. But if you commit to 15 pictures a day, you're taking 300 pictures a month minimum. It's hard to not get recognition through that much picture taking, through that much chart annotating, through that much presenting in class and requesting feedback. So I feel like I beg every day to get people to participate. Guys, take 100% control of your educational path. You will get out of this software exactly what you put into it. So give it everything you got and let me know how I can help. So let's get to the high probability trend trade, guys. Three little rules happening on two charts. And the first rule says that your large chart, remember everything starts on the large chart, you got to have strong trigger lines. It should be a non-negotiable for new users. Strong trigger lines lead the way, guys. And you can only have strong trigger lines if you're trading with the large chart direction. So let's define that. Easiest lesson you get today. If the background is green on your large chart, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. Because the only way rule number one will ever be met is if everything agrees. In a downtrend, when the background is red, you're only looking for rules to be met for high probability trend trade short. Absolutely no reason to fight the trend, guys. The trend is your friend and all those other cliches. But if you commit to trading with the color of the background as you learn the software, I'm going to tell you there's times when you won't as you grow. But as a beginner, if you just commit to trading with the color, you're set. It's going to keep you from fighting things. It's going to eliminate tons of mistakes, and it's going to set you up to always have strong triggers. The only way to have strong triggers in an uptrend is if everything is green. Your small triggers, those solid lines, two lines create one trigger, or your large triggers, the dashed lines, two lines again create the one trigger. Guys, if your small triggers are green, if your large triggers are green, your background is green, well, then that's a recipe for success. And then you have what's called a strong trigger look when there's separation between the small and large, when they open up like scissors, right? And it's that gap between small and large when everything is wide and angled in the direction of the trend. It lets me know that the odds are favorable for the market to continue in the direction of the trend, guys. Odds favorable momentum. You're going to hear that in class all day long. Same thing in a downtrend. Small's below the large. Everything is wide. Everything agrees in color. And that space between the small and the large let me know that the odds are favorable for the market to continue in the direction of the trend. So, quick question for all my new users. Are you comfortable? Strong triggers mean separation between the small and large, guys. This is rule number one. This is the advantage of momentum. This is the look when it is the absolute most favorable for buying Fibonacci support on a pullback on that smaller, faster chart, that entry chart, or selling Fibonacci resistance on a smaller, faster chart. And those pullbacks, when you're looking at the large chart, they look like a tail or a wick, some people call them. We don't trade these tails, guys. These tails are the pullbacks on the smaller, faster chart. You're going to be able to pinpoint exactly where the bottom of those tails or the tops of those tails are most likely to happen. So strong triggers lead the way. Strong triggers break areas. Strong triggers fix mistakes. Strong triggers push the market in the direction of the trend. So the opposite of strong is weak. When you have weak triggers, you lose the advantage of momentum. When you have weak triggers, anything can happen up or down. You're going to see reversals happen quite often with weak triggers. Even without the benefit of Fibonacci, when I go to my little rule number one picture here, you'll notice that strong triggers push it down, weak triggers precede a reversal. Strong triggers push it up, weak triggers precede a reversal. Guys, our advantage comes when the triggers are their absolute strongest. And then sometimes you'll get, and I think the easiest way to recognize this, good morning, Jose, is when the colors don't match. Your large triggers and small triggers are different colors. You can't have odds favorable momentum. When your trigger lines don't match the background, you can't have odds favorable momentum. So keep it color based. It's going to keep you out of a lot of trouble. Everything matches. When you see this right here, guys, this is a transition. This is buyers and sellers fighting it out for supremacy. You don't have to get caught in that fight. Let them duke it out. One of them's going to win. Everything's going to line up, and odds favorable momentum will return. But this is rule number one, guys. This sets the tone for everything. Momentum is an awesome advantage to have. It happens on the large chart. And then when you have it, 1/3 of the equation is there, guys. 1/3 of the recipe for a trade has been met. So with that momentum, we have to make sure that we're not trading into a termination condition. Terminations are false, which means that you're going to have room to a profit target. And those termination conditions, we took a quick look at it, all those lines that stop the market. These are the lines that we're looking for. And guys, this is also a great roadmap if you're brand new. What am I looking at on my charts? The areas that may stop the market, and I want to give you my thoughts on it. These areas are where decisions are made. These areas are where the people who control the market are deciding to get in, are deciding to get out. And that's what creates these bounces, these indecisions, these reversals. So we're looking for red resistance and blue support, yellow one-to-ones, a divergence high line, which is a magenta line that prints from a pivot where momentum was lost, or a cyan divergence low line is just a cyan line. It prints off of a pivot. Price and momentum create this. And it just means that the momentum's going away a little bit. So we're going to identify these areas, and it's a pretty simple recipe to determine whether or not termination conditions are false. And I'm going to go to the actual user guide here, and we're going to go through it with this picture right here, guys. This gives you every option in one picture. It starts with price reaching an area, meaning that these dynamic Renko bars come down and reach Fibonacci support in this case. When they reach support, if all of the trigger lines remain above support, you've reached a termination condition. This is an area that may stop the market, may create a bounce. This is an area that there just may be hours of indecision at. You just don't know. Accept the fact that you don't know, and don't try to trade into it if the triggers remain above. This is a termination condition. And guys, that's the simple recipe. Price reaches, meaning that the dynamic Renko bars come down and come in contact or a tick away. And when they reach, where are my triggers? My triggers are above support. I'm not going short. Rule number one says make sure you have a clear path. Termination conditions aren't true. So up here, price reached Fibonacci support. All the trigger lines remained above. You guys knew. Don't go short into that area. Not yet. Let's wait for the reaction. There's one of those tails. That was a potential reaction, a little bounce off of it. When is an area broken? An area is broken when both the small triggers and the large triggers get to the other side of the area. In this case, you can see that resistance begins to behave as support. The area is broken. The path is now clear. Support behaves as resistance. There's that odds favorable momentum. And there's one of those little tails, guys. There's one of those tails that signifies a potential entry with odds favorable momentum and now a clear path. And it takes you right down to the next key area. So this one, no trade, no triggers, no trade. And then right here, whoops. Sorry, my Snagit editor just died on me. Bum, bum, bum. Open it back up. Or try to anyway. There we go. Maybe. Got it. No triggers, no trade. I apologize for that. Small and large break in area. The area is now broken. The path is clear. It's time to look for the rules to be met. So guys, this is the most basic. And my Snagit is trying to kill me here. This is the recipe for terminations, guys. A cyan divergence line prints off of a pivot from a loss of momentum. Has nothing to do with terminations. Price and momentum create this line. Price doesn't reach this line. But when price comes back and reaches the line, guys, I want you to write that on a piece of paper. Price reaches an area. That's the first part, always. Just ask yourself, where are my trigger lines? If my trigger lines are above this divergence line, no more short trades. It may stop the market. And sure enough, it does, creates a reversal. Guys, this is what we call a pivot stop out. And a pivot stop out is a very powerful termination condition. It may reverse the market. If it does, we're going to call this one from a low a strong bottom. And a strong bottom or a good bottom, that's the precursor for the highest probability trend trade long you can take. And you're going to see these pivot stop outs from highs as well. When they correspond with Fibonacci, they become even more powerful. And this one is a great example. And I think I completely lost my Snagit. Let's see if we can take a picture. This is a great example of 90% of your day is sitting on your hands. 90% of your day is reading your indicators, guys. Because when price comes up and reaches Fibonacci resistance, remember the recipe, all you have to do is ask yourself, where are my trigger lines? Since they remain below, no trades into that line. There's no reason to. It may create a bounce. It may reverse the market. It may create an indecision that'll shuffle that can mess you up. And then from resistance, it pushes all the way down to Fibonacci support, all the way down to that mid band. Notice that the large triggers don't follow. This is a very strong indication that price may pull back, close that gap to those large triggers, and price reach support. No triggers went through. Guys, no longs, no shorts. Mark, how on earth am I going to make money if I can't go long or short? Well, you're just going to be patient because the market comes back up and it reaches resistance. No triggers. Don't go long. It reaches a divergence high. No triggers break. Another one. Second divergence, that's three terminations in the same location, guys. It's powerful with a pivot stop out. It's powerful at two levels of resistance. And then notice what happens after the termination. Your large triggers go from green to red. You get that reversal. Small separate from the large. You get that odds favorable momentum. Price has not reached Fibonacci support. And then there is one of those tails, guys. One of your potential entries for the highest probability trend trade that you can take. This is where your patience pays off. This is the trade that pushes you to that next level and beyond typically. This is the trade that typically wins 70 to 80%, guys. This is the foundation that we're building right now. We're looking for the best of the best with the clear path with that momentum. Is everybody pretty solid? I've got pictures for everything, and I hope you guys like these. It's If price reaches the area and no triggers break, you don't have a clear path, guys. It's okay to sit on your hands and do nothing. It's okay to give it a minute, right? Let the people in charge figure it out, and then we'll wait for the clear path when both the small and the large break to the other side of the area. Notice that resistance behaves as support. You can see that odds favorable momentum. There's one of those tails once again, guys. This is where next-gen users, where the brand new users chasing that high probability trend trade, this is where you find that 70, 80% success rate. No triggers, no trade. Both triggers, giddy up. Let's look for those rules. And then I told you that I was going to introduce you to a medium probability scenario. And guys, this is it right here. I'm going to take a picture of the picture because sometimes the verbiage gets people. When your small triggers smash through an area, your large triggers remain below the area. This area has the potential to break because of the odds favorable momentum. The potential is there. Strong triggers break things. And you'll notice that 50% of your triggers have cleared the area. 50% have not. Hence the name, the 50-50 trade. It has nothing to do with your chances of success. It's 100% you understanding that the area has not broken, that the path is not clear, that one of those key advantages that you need for a high probability trend trade has gone away. Guys, these are fantastic trades, and I take these trades all day long, but if I'm sacrificing a clear path, it's imperative that I not sacrifice momentum. Areas don't break with weak triggers typically. It's imperative that I don't give up that perfect entry area, that I make sure that I have the least amount of risk because I'm not trading with a clear path. I'm only trading with the potential to break, guys. And this is how you define those areas, those termination conditions. And we're doing this on the large chart. We're doing this with areas on the large chart. I'm going to show you one more picture. And guys, I love to ask for whys. Let me know that you're following along. I know that there's a lot to look at on day one. There's a lot to think about on day two. Repetition is the key, guys. But if you embrace that simple recipe, give me a why if you're with me. When price reaches an area and absolutely no trigger lines break through, sit on your hands and do nothing, guys. We're not in control of the market. We don't know what they're going to do. If you do know, you shouldn't need this class. You should have already won the lotto, right? Look at what happens here. Mike, it will, I promise. From support, look at the buyer's reaction, guys. Pulls you right out of a short trade if you decided to break rule number two. And then if you thought, oh my gosh, it's going up without me, well, the sellers weren't done. There was no agreement, no momentum, no clear path. And then the buyers try again, and the sellers try again, and the buyers try again, and the sellers try again. And guys, this is beautifully defined visually. That 90%, you doing nothing. Let these guys fight it out. Let these guys lose their money. We don't need to do it because eventually everything goes green, right? Everything starts to agree. Your small triggers work their way outside of the large triggers, and all of your triggers get above resistance, which means that your path is now clear. And guys, look at that with the momentum. There's one of those tails again. This is your 90% or this is your 10%, guys. This is your highest probability trend trade, a trade that typically wins 70 to 80% of the time. This is the trade where the new user has built this outstanding foundation. You've learned how to be patient. You've learned how to read your indicators, and now you're learning how to capitalize on those two advantages of momentum and a clear path. Is everybody comfortable with this idea? I'm going to drop this one in the room because I'm telling you guys, a clear path is probably the most forfeited. Whoops. Let me delete that. I only gave you the 10% there. This is probably the most broken rule among new users is we love to be in trades, guys. We're excited. We can't wait to get into trades. And sometimes we make poor decisions when we do it. I'm going to show you one more termination condition. Good morning, Cav. Guys, this one is not on the large chart. This one is not price reaching an area. This next one is going to help you identify on that smaller chart, on that faster chart, when change may be happening on the large chart, guys. So sometimes you have that clear path, didn't reach the key area, and it goes up, and you're like, what the hey? And then sometimes you even have odds favorable momentum and nothing in the way, and that market just ricochets down. This next termination condition is the only one that I'm giving any credit on a smaller, faster chart. I don't worry about the lines on a small chart, but I will look for three divergences in the same price range. I will look for three losses of momentum within the same price range because it can terminate a trend. There was a great discussion over in Traders Chat. How come that trailing threshold gets me? How come people tend to give money back rather than collect it? And this is a great one because they ignore this. Three divergences in the same price range may terminate the trend. It becomes even more powerful when your small triggers work their way inside of the large triggers. Visually, we know this to be an anything can happen look. So not only did we lose momentum three times, the market couldn't push down, the buyers stole the momentum from the sellers, but visually we see those anything can happen triggers. And it becomes even more powerful when the third divergence is higher than the previous from a low or lower than the previous from a high. This is what we call a head and shoulders pattern. And it just means that they couldn't even push the price down to get there before they stole the momentum. Guys, you're going to see this look from a low or this look from a high when your large chart is chugging along and can't give you that information quick enough. So these three divergences become a giant red flag, no more short trades, or even better, they become a money management opportunity for you. If you are in a short trade and three divergences print, it's okay. Cut ties, get out of it. Your advantage is gone. Everything you do should have a statistical advantage, guys. And this visually says, hey, you know what? Get out of the trade. Let's wait for the next best opportunity. Let's take a little bit of money and let's wait for it to be great again. So that's the only one on a smaller, faster chart that I'm looking for. Hey guys, look at this. Odds favorable momentum coming from a termination that creates a full reversal. Egads and little fishes, guys. Look at the bottom of the tail. That's your entry. This is what we're talking about. When the market reverses off of Fibonacci support, when it gives you odds favorable momentum, when your path is clear, how do we find this entry, guys? How do we capitalize on it? Well, I'm glad you asked. I'm going to show you. And here's the same scenario. When everything says up on that larger chart, when the path is clear on that larger chart, this is what your small chart looks like. You're probably going to have strong triggers. Your background better be green. Nothing but green bars going up, and this is where that fear of missing out kicks in. This is where you guys go, oh my gosh, it's going without me. I'm not getting paid. This sucks. Maybe you kick the dog or yell at your wife. Don't do it, guys. Because rule number 3 says that we're going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price that's counter the underlying trend. A pullback is when the large crowd, when the guys with money are pushing up, when the guys with money aren't reacting to areas, there's these yahoos that want to fight everything. And they're like, you know what? I think I'm going to go short. I think I'm going to take some profits. And it creates this little push. Guys, this little push is how we capitalize on all the hard work that these guys have created. So much so that we're going to wait for it to come to us. We're going to use a limit order at an area inside of favorable large triggers. This becomes the best of the best. This becomes entering the market where it's most likely to continue. And I'm going to define favorable large triggers first, guys. In terms of a high probability trend trade, when your small chart large triggers and those synthetic triggers, one is smooth, one is stepped, we want these working together. Favorable large triggers means that they're working together, that they're one on top of the other, that they are wide and angled in the direction of the trend. And guys, when you have this amazing look with large and synthetic, it's going to give you the smallest window of opportunity possible. It's going to give you the smallest point where the market is likely to continue. And that smallest window of opportunity means that you have the least possible amount of risk on a trade. It feels good to be able to manage your risk before you ever even have to think about profits, guys. So we're going to look at the small chart. We're going to see everything is going up. We're going to look for those favorable large triggers, and you're going to identify the areas that may fall within. The areas that trend trades happen from: fibs, mid bands, yellow 1-to-1s. But the key is that they need to be inside of favorable large triggers. So when you're annotating your charts, when you're annotating your trades, and you're talking about your entries, I want you to embrace that phrase, areas inside of favorable large triggers. That's where the area where the market is most likely to continue. But we need to let those yahoos do their thing, guys. And that little pushback, that little fight against everything that's going up starts with a down bar, a reversal bar. A reversal bar doesn't mean that the market's reversing forever. It just means that after all those up bars, there's a down bar. And at the time of the down bar, you'll be able to pinpoint where the market is most likely to continue. You are going to look at your favorable large triggers. You're going to identify the areas that are falling within them. And remember, favorable large triggers are screaming to the upside. So if there's an area kind of hovering above it, it's probably going to get swallowed up. Your window of opportunity for a long trade goes from the highest point of support, the line closest to price, to the lowest point of support, the line furthest from price, inside of favorable large triggers. Guys, this is where the market is most likely to continue. Because of the momentum, because of the clear path on the large chart, you're going to activate a limit order at the top of the window. We're not going to trip over pennies and say, oh, I don't want to watch it go against me. I'll put it at the bottom. It's going to bounce off the top every time you do that. There's cameras everywhere, guys. But if you get that pushback and it does hit that highest point of support, I'm typically a tick or two above it. Guys, you're in a trade. And remember that you're in a trade with odds favorable momentum to the upside. You're in a trade with a clear path to the upside. Both of these dictated by the large chart. And now you're in a trade with the advantage of having entered exactly where the market is most likely to continue. This turns out to be the bottom of that tail on the large chart, but we're using areas inside of favorable large triggers to define it on the smaller chart. So when the reversal bar prints, let's go through the whole process. From the top of the triggers to the bottom of the triggers, this is where I'm looking for areas. This is not my window of opportunity. My window of opportunity will extend from the highest point of support, a green midband, to the lowest point of support, those yellow 1-to-1s. This market may bounce from within this area. this becomes the point where the market is most likely to continue. Is everybody comfortable with that? Give me a Y in the room if you're with me, because I'm telling you right now, great entries create very manageable trades. Great entries reduce risk. Great entries give you the opportunity to manage these things aggressively. The market comes down, right? They're fighting, they're fighting, they're fighting, and they hit that highest point of support, and you are long and you're ecstatic, and your hands are sweaty, and your stomach's turning, and you're like, oh, I hope it goes up. And then those jerks push it all the way to those one-to-ones. And you're looking at negative equity, and you're thinking to yourself, oh, should I get out? Do I jump ship? I'm not sure. I'm so nervous. What would Mark say? Mark would say that you are still inside of that window of opportunity. Your advantages are still solid. You still have momentum and a clear path, and you're still at that point where the market is likely to continue. Be okay with some fluctuations on a smaller, faster chart. And then here's the brilliance of what we do. If we know where the market is most likely to continue, well, we also know where it shouldn't go. We know where if it has gone beyond, we no longer want to be in that trade. And you'll put a protective stop, maybe 4 or 5 ticks below that window of opportunity. And if for some reason the market chooses to be wrong in that moment, they may come down and hit your protective stop. And if they do, guess what? You just took a loser. You just lost the trade, guys. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I've never seen a 100% winner. Well, that's not true. I've had days where that's happened, but it's rare. And if you look over the course of the month, 100% winners isn't realistic, guys. We are trading a statistical advantage. We're trading a pattern that has been proven, that has been back tested, that you are capable of back testing to show you that when you take this trade, when you take this setup 70 to 80% of the time, 70 to 80% of the time, guys, this is your result. Profit target reached. 20 to 30% of the time, you have to dust off and clean your wounds and say, you know what? It's just a cost of doing business. I just paid rent. And the more pictures you take of this look, guys, the more times you study it, you take pictures, you annotate charts, the easier it becomes to recognize in the moment. So if you took this trade, I hope somebody did, maybe, not a lot of NASDAQ traders in here. That's okay. If you took this trade, this would be your picture, right? And we would start talking about rules. I want you to draw an arrow, and I want you to use that call out button. I want you to say odds favorable momentum or strong triggers or something that lets you know exactly what rule number 1 is. And that arrow says, and now I know exactly what it looks like. And then I want you to take another arrow. Notice that the top of that bar hasn't reached an area. So we're going to write something clever, like no termination conditions or clear path, something that lets me know exactly what visually rule number 2 sounds like. And guys, this is where the magic happens. This is where trading dreams come true. I want you to write entry at an area inside of favorable large triggers. And guys, don't you dare skip a word, because what you're doing is you're reminding yourself that you have to wait for that pullback, that your highest chance of success comes from that bounce point inside of favorable large triggers. And this verbiage is designed to keep you from getting in early all the way down, right? Or it's designed to keep you from jumping in late, because when you get in at the bottom, you have the least amount of risk. When you get in on the pullback, you have the highest profit potential. Guys, when you take this picture, I want you to drop it in the room, and I want you to say something clever like, hey, Mark, check it out. Ta-da. And this becomes your path, guys. You have to study it. Do you see the tail on the large chart? We don't trade tails. We trade pullbacks to areas inside of favorable large triggers. Guys, this particular picture was taken about a year and a half ago, I think. I'm not even sure how long ago it was. But I'd like you to look at the situation here. And then just for grins, it is damn near the same picture. The pattern's been repeating itself for an awful long time, guys. We don't trade tails. When the rules are met on the large chart, circle the tail. If it lines up with an area inside of favorable large triggers, open up your spreadsheet and drop that picture in there. That's exactly what you're looking for to get into the market. And guys, this is our first hour every day. High probability trend trades, giving yourself the 3 advantages on only 2 charts and taking the absolute best of the best. This is your foundation. Odds favorable momentum. Does everybody see it? Small below the large, larger wide, angled in the direction of the trend. Who can tell me, guys, here comes your gold star bonus points. Who can tell me what rule wasn't met right here? What are we missing in that equation for a trade when price reached Fibonacci support and absolutely no trigger lines broke? Perfect, Brian. Guys, we have no clear path. And look what the market's doing. It's not guaranteed to stop it, but look at the reaction. You never have to get caught up in that reaction. Price reached Fibonacci resistance with weak triggers, and look at the bounce. Kablooey. Right off the fib. Price reached resistance all the way back to support, and then it continues. You knew where these bounce points were because of rule number 2, guys. You knew that when there was odds favorable momentum, strong triggers break things. And if we go back and look, it broke things right from resistance inside of favorable large triggers. How amazing that this happens every day, that this repeats itself on every market. And then it goes right to where we expected it to go, guys, right to that blue fib with weaker triggers. And we know that we just have to be patient for a moment. Are there any questions about the high probability trend trade, Trader JP? I see you in here. Welcome to the room. Guys, this is the beginning. This is your stepping stone. This is the one that's going to put you in the market at the absolute best spot. And I want you to focus on entries. Just focus on entries for 20 days, guys. Focus on getting in at areas inside of favorable large triggers. This checklist is designed to get you in there. This checklist is designed to give you those advantages. Is the market coming from a good top or bottom? That reversal that comes from a termination condition. If it is, that's awesome. If it isn't, you can still take the trade, but we're looking for those divergences on the small chart to help us manage. Do I have odds favorable? No terminations, area inside of favorable. Guys, I've never had anybody in the history of this checklist do worse than 70% when following the checklist, ever, in the history, in its whole existence. This is something that's great to print out, to put on your desktop, to remind yourself, to police yourself each and every time you get into a trade. I've got the exact same one with the visual for you guys that need sparkly things to make it click. What is a good top or bottom? Well, it's a termination that creates the full reversal. There it is visually, right from the materials. Remind me, Mark, what's odds favorable momentum? There it is. There it is. And just as a safety check, this is what it looks like when that momentum goes away, guys. Study this in the morning. Termination conditions not true. That's a termination. That's a clear path. And then identifying your window of opportunity, that point where the market is most likely to bounce. Guys, these are all available to you right here. I just put them in the room. Take them, download them, drag them over to your desktop. And then I'm going to give you one more thing, guys. I'm going to give you the KISS trading plan. I talk about this every day. I introduce this every day. I encourage new users to follow this every day. I don't give trading advice, and I don't tell you when to get in, and I don't tell you when to get out. But I can tell you through my own trading, through historical study, through the people that I work with each and every day. Guys, this plan gets people funded on Apex in their first 30 days. This plan keeps people consistent. This plan keeps people focused. And what it does is it just gives you a stepping stone in your journey, guys. It's designed to optimize your chances with that high probability trend trade. It's designed to optimize your chances with that 50-50 trade, that area not broken trade. And then once you participate, right? Simulation study, class feedback, practice. you're going to become a chart reader. And when you become a chart reader, you're going to create a plan that suits you. You're going to create a plan that works for you. Everybody wants to be advanced, right? Everybody wants to be in every trade. I want to do what John Novak's doing in the other room. I want to do what Safi's doing in the other room, what Ron's doing, what Jose's doing, what Tyre's doing, what everybody's doing. Focus on you for a little bit, guys. You've got to build a foundation, and then from that foundation, the world's your oyster. Um, if you are not consistent right now, if you're not winning more than you're losing, this is a great thing to fall back to refocus. Um, your simple plan for consistency. Good morning, Dwight. Just don't fight the large chart direction or triggers. That eliminates about 70% of the mistakes that new users make. Forming an opinion on where the market is going rather than just embracing where the market is going. Define your entry. Take 20 days. Take 30 days. Take 100 days. It doesn't matter. It's a marathon. But learn to get into the market at the best spot. Learn to get into the market where it's most likely to continue. Minimize your risk. Manage your risk before you ever worry about your profits. And once you're getting great entries, guys, great entries create manageable trades. Your management as a brand new user can be just as pragmatic, just as methodical as your entries, just as checklist based as your entries. And everything about management for the new user, you guessed it, revolves around a great entry, revolves around getting into the market at the most likely spot for continuation. When you enter, in this case, at resistance inside of favorable large triggers, the only thing for you to do is put a stop where the market shouldn't go. Your ATM strategies, your stop strategies that are given to you in the workspaces from Nexgen have 12 ticks for crude oil, have 12 ticks for the S&P. Guys, 12 ticks is something designed to give you reaction time. If 12 ticks is just below resistance inside of favorable large triggers, well, then you need to move your stop to 15 to 16, right? And if 12 ticks is 5 ticks, 7 ticks, 8 ticks above the highest point of resistance, well, you can reduce your risk a little bit, putting your initial stop where the market shouldn't go, guys. Managing your risk before you ever manage your profit. You're either going to get stopped out, totally normal part of a positive equity curve, or that market is going to sing your praises for having all those advantages, and it's going to give you a reversal bar in the direction of the trade. The same thing that prints up to identify your window of opportunity prints down to allow you to minimize your risk, to put your stop a tick or two above it. And now, even if that stop gets hit, and it may get hit now and then, your losses are even smaller. You've got less risk on the trade. It's going in the direction of the momentum, in the direction of the clear path, and there's nothing for you to do except sit on your hands and wait. And you're either going to get stopped out for a much smaller loss, or it's going to hit your first target. And guys, my first target is $100 in this plan. It's $100 because winners create confidence through the memory of success. Winners make you feel good. Winners get all those serotonins and dopamines dancing in your heart, and you feel good about it. And your palms dry up, and your stomach's no longer queasy, and you're like, hell yeah, I'm good at this. I had all these advantages, and I just got paid. And now I'm going to move my stop to break even. So you just got paid. You've got no risk on the trade. And guys, this is designed not to be the best choice for a stop, right? Because we're still learning to read indicators. This is designed to remind you that you entered the market because the large chart said odds favorable momentum. You entered the market because the large chart said that there was nothing in the way. And we're going to learn to trust the large chart by holding on for that second contract. We have money in the bank, nothing to risk. And guys, your only option here is either a break-even stop, which I'm not going to lie, it's going to happen a lot in the beginning while you're learning to read your indicators, or it's going to hit that second target, which is only $200 in the distance, guys. And that $200 added to the $100 that you've already made, that's a $300 trade. That's a $300 trade. James, there's huge answers to that. Initially, I put my stop where the market shouldn't go. I'll move it behind a reversal bar. My own personal plan, I omit this one because I've been reading charts for a while. And then when I get into areas, let's say hypothetically, I'm getting close to my targets. I may use a trailing stop as I get in. Um, the theory behind stops is that you put it where the market shouldn't go. So if you just arbitrarily move stops behind, you're likely to get stopped out because remember that we're doing this on a smaller, faster chart. It's like chumming the water. You're putting a half-eaten tuna in the Gulf and just hoping sharks don't eat it. Does that make sense, James? As you grow with the software, you'll begin to recognize a little more when it's appropriate to move a stop and when not to. I find that for new users, this super pragmatic approach is a great way to take the emotion out of it, to take the opinion out of it, to get you focused on making money consistently in the beginning. Is the good top or bottom referring to the fibs? That's really fibs, one-to-ones, divergence highs, Cav. What's a good top or bottom? Great question. You know I have a picture for it, right? What's a good top or bottom, guys? When a termination condition, price reaches an area and no triggers break. Price reaches an area, no triggers break. If this reverses the market, large triggers go from green to red, background goes red, small below, everything agrees. This is a strong top. Strong tops, Cav, are awesome right till you get to a termination condition. And if you get to a termination condition just because of the strong top, this is not obligated to break. But if this termination creates a reversal to the upside, well, now I have a strong bottom. Absolutely. Thank you for the question. And then a strong top, and that's the one that gets it running, guys. So when we talk about a strong top or bottom, we are very much talking about the idea that one of those key areas has reversed the market, that the decision was made. And let's see if we can find a large chart example. Maybe not on crude. There we go. How awesome is this? From fib to fib, strong triggers break. So Cav, this would fit the description for a strong top. It's a termination that creates a full reversal. There's some opportunities all the way down until weak triggers at a fib reverse the market. And I think that this is a great example right here. We go from termination to termination, back to termination, to termination, to termination, to termination, to termination. Holy smokes. We never get our rules met until it breaks, and then off it goes to the races, right? So just because you have a good top or a good bottom, it doesn't guarantee the next area breaking. You always want to incorporate that idea that you want that clear path. Thank you very much for the question. Guys, I'm telling you, the questions have been awesome in this room lately, and I think the class has been even better because of your questions. Don't hesitate. So guys, this right here, 30 days, high probability trend trade. It's going to take you into that medium probability trade, 50-50 trade. Notice that it says one area not broken. Again, there will be times where it may be 2 or 3 areas not broken, but for your highest chance of success, to optimize your results as a brand new user, one area not broken. And you've got to have momentum on both charts. No divergence on the small chart. Coming from a good top or bottom that we just discussed, and then get in at the area the same way you would on a high probability trend trade. Notice that it says no divergence on the 5-1, no loss of momentum, because we're already forfeiting clear path. Notice that it reminds you, divergence, no trade. And notice that it reiterates, once again, if divergence prints when you're in the trade, get the hell out. What do you suppose kills 50-50 trades more than any other scenario, guys? Divergence. So when you talk about your best entry, when an area has the potential to break with all that momentum, I should have strong triggers. I should have no divergence and I should have a small window of opportunity, guys. I don't want to put $300 risk on a maybe trade. I want it to be clear and concise. That's a great look at a short trade. That's in the KISS plan so that you can look at it. And the same is true going the other direction, guys. And this one has multiple areas, but no divergence, strong triggers, tiny window of opportunity. There's really one little spot where this market is most likely to continue if the areas are going to break, and sure enough, it does. And guys, this is your plan for the first 30 days. Keep it simple, keep it focused, right? Keep it aggressively advantageous. And what you're going to find is that if you just work on becoming a chart reader first, everything else is going to open doors for you. Um, and that's the first hour, guys. The first hour is all about the high probability trend trade. The first hour is about recognizing three advantages. The first hour is about learning the trigger and Fibonacci rules for when it's okay to trade. And now we get into my favorite part of the classroom, guys. We're going to watch the live market. We're going to look for rules to be met. But more importantly, you guys are going to post in the room. You're going to show me what you're doing. You're going to tell me what you're doing. You're going to ask me questions about what you want to do better. The next 2 hours are very interactive. They are designed 100% to keep you focused on the advantages, no matter what kind of trade you're taking. So when I go and I look at your charts, I'm going to go back to advantages. If it's a momentum style trade, I'm going to go back to advantages. If it's an HVA trade, I'm going to go back to advantages. If it's a trend trade, I'm going to go back to advantages, guys. And we're going to keep this educational for everybody in the room. So do me a favor, annotate your charts. Tell me what you're thinking. Let me give you the best possible feedback, and let's hit our goals together. And I'm going to be back in about 5 minutes, guys. So if you have a chart, post it. If you have a question, post it. I'm going to go mic silence for about 5 minutes. All right, y'all, let's get back into it here. Small blue arrows on crude oil chart, 5-1 chart. Chances are they're entries, Cav. Can you show me a picture of what you're talking about? I don't have any entries on my chart because I'm not trading right now. But typically here, let me show you. If I buy the market, is it that little blue arrow right there? So if you go long, you get a blue arrow. If you go short, you get a pink arrow. There you go. So it just kind of shows you where you're getting in, where you're getting out. And you can get those on your charts if you don't have them. Go to data series. Yeah. And then if you scroll to the very bottom, after you right click and go to data series, there's a plot executions where you can put text and marker. You could put just the arrows themselves, or you could have none at all if you like it to be super clean. Totally up to you. Good stuff. So, all right. So as we get into the second hour, guys, let's go through and we'll start with, before I go to people's charts, um, I have odds favorable momentum here on the S&P. My smalls are below the large are wide. They're angled in the direction of the trend. But you'll notice that this fib isn't broken yet. I don't have small and large through. So while I have momentum, I don't have a clear path. I have the potential for break, but since it's only potential, the clear path isn't there. If you are a 50-50 trader, if you're looking for this particular trade, you're going through your checklist right now, and you're saying to yourself, what are the conditions that need to happen on that small chart? Do I want to make sure that I have no divergence? I want to make sure that I have strong triggers. I want to make sure that my window of opportunity is small enough that I'm not putting an awful lot of risk on a trade where I am hoping that the area breaks. And that's kind of how the little run through goes through. And then if we go to the next market, crude oil, that was an awful big rundown, wasn't it? And they're just kind of drilling to the downside. Crude oil inventories in about 20 minutes. They may be jockeying for position. And then the NASDAQ as well. Everything. Support broke, behaved as resistance. You got to pull back up to it. Down it goes. All that momentum to the downside. There's one of those tails on the potential to break. And sure enough, that pulled directly to resistance inside of favorable large triggers. No divergence, strong triggers, potential to break. Guys, that's a perfect 50-50 example. Rules met 100%, and the outcome was pretty favorable there, I think. And then look at the indecision. Off of support, closes the gap to those large triggers. Your smalls are green, these are red, and then these are green, but the background's red. Look at all of the, oh my gosh, I just don't know what's going to happen. And then eventually everything agrees and gives you the opportunity to make an awful lot of money. And this is what we do every day. So I'm going to scroll up to the top of class. I'm going to look at some of the pictures that are posted. And I don't think we've had a whole lot today. So we'll see what happens. Ron got us going. Ron's a big fan of momentum and a clear path. And then when he gets momentum and a clear path, he just looks for little opportunities inside. And this was an actual aggressive little short with everything saying up. That's interesting, Ron. Ron foregoes the high probability trend trade and takes a little squeeze back to get to the best of the best area. Remember, you're going to create a plan that fits your needs, guys. It's going to come off of your ability to read charts. Gary, there is a termination that reverses everything. That one pulls back to the mid band, doesn't make your HVA line. That one goes back to the mid band into waves of support, and then you get that 50-50 with divergence. And if I'm not mistaken, that market went back up there on that 50-50 with divergence. It just danced around for a while, made it tough. Not a lot of pictures from you guys today yet, so the market's probably not giving a lot of rules met. Brian, number 17, great job posting in the room. Now I know you can do it. And guys, I think that was it. There really weren't any pictures today. So how do we feel about weak triggers and one, two, three, four divergences in the same price range? It's not guaranteed to push up, but it sure has a pretty good shot of doing it. Price comes directly to support. None of the triggers are broken yet, guys. You're in this little holding path. What's going to happen? Will it break or will it bounce? Does anybody know for sure? Yeah, me either. I don't have any idea. That's a lot of momentum to the downside. Now the small triggers have broken through, but this area definitely is not broken yet, guys, and you just gotta be a little patient. Crude oil, egads and little fishes. That's a lot of down, isn't it? Um, and those are the three markets that I'm looking at. There's those weak triggers, multiple divergences, and sure enough, it's pushing higher. Never saw that coming. In a market that's not producing an awful lot of trade setups, guys, this makes my day a little more difficult because there's not as much live stuff to talk about. So we'll take a look at Cav's picture. In Cav, you say entry on the pullback into large triggers, stop above the mid band, took some money before your first target. So, Cav, you had everything down and you just took a little momentum style with a clear path to get to the fib. Held it a long time. Um, Cav, did you guys read? There was a little discussion on these funding firms, and Apex has a trailing threshold. Um, and some people are like, well, how do you beat it? How do you beat the trailing threshold? Cav, I don't know which fund you're going with. This is certainly not the way to beat it because if this support holds and it rockets up, you're going to find yourself stopped out of your Apex account, blown out of your Apex account really fast. Um, if you do something like take profit trading where they don't have a trailing one, this is a much better approach. And I'm not saying that one is better than the other, but I'm saying make a decision on which prop firm you're going to use and make sure you understand their drawdown rules. Because that right there, if any one of those divergences from support with no triggers through decided to push it up, you would find yourself out of an account pretty quick. So make sure you have reasons for exit. And especially if you're going to get in on momentum, you had three divergences from a fib with no triggers through it. So up to you guys. I don't give trading advice ever. I don't even tell you whether your trades are right or wrong. We just talk about advantages and disadvantages. And sometimes you get lucky, and I'm not afraid to tell you that you did. But I tell you right now, when you hold into areas and you hold into and through stuff, when you're on simulator, it'll break every time. When you're in the live market, it bounces, is what I've found. So, all right, let's put the pressure on some of you newer folks. Brian 17, what do you want to talk about? Mike Lynch, is there something that you want me to cover? Is there something that you're like, man, I wish you'd just talk about this again? I sure hope he does, because you can ask. We can talk very much about the path, guys. I'm a big fan of sequential learning, of making sure that you crawl before you walk, before you run. And I find that when you embrace this path and you do it in order, you get to the run, you get to a full out sprint a lot faster. Don't be like I am when I get a new grill and I read the first instruction and the last instruction and I hope for the best in the middle, right? I try to get to the finish line before I run the race. Everything starts with knowing which direction, right? Awesome. Mike, don't be shy. Everything starts with knowing whether you should be going up or down. Huge advantage being able to see that, being able to know which direction to go. And then once you have that established, making sure that you have strong triggers, making sure that the market is likely to push in the direction of that trend. Um, Taking that to terminations and then to entries, guys. So keep it in order. What's a questionable good top? This would have been a questionable good top, but it can't be questionable and good, right? So it can either be, let's keep it simple. It's either a good top or it's not a good top. And guys, just because it's not a good top doesn't mean that the market won't reverse. Sometimes the market overruns. And let's see what your small chart said up there. This one never gave any indication. That probably would have been one of my 30%. But Cav, when we talk about it, if your reversal is not coming from a fib, if it's not coming from one-to-ones, if it's not coming from one of these lines, this pivot created the line. It didn't come from it. This market reversed someplace where we don't expect decisions to be made. Does that make sense? It's kind of in the middle of nowhere. And then the flip side to that is when the market reverses from an area where decisions are made, the likelihood of it creating that reversal is larger. So literally embracing price reaches, no triggers, reversal, that's my strong top. And here's a good example. Look how the market didn't reach the fib, didn't this nothing caused this reversal. It just didn't make it to the next area. At the areas where termination conditions happen. So any place that I can consider a termination condition on my large chart. All of these areas. Decisions are not made at fibs only. Decisions can be made anytime during the day. Cav, I don't know if you're married. Has your wife ever been hungry for Mexican food and then halfway there, without a warning, it turns out that it's time for Italian, right? Or maybe a cheeseburger sounds great, and before you get into the restaurant, all of a sudden it's more important to go get a steak someplace else. That's the market. You never know where the decisions are made. Yeah, I'm right behind you. Um, but what we do know is that these Fibonacci areas, gosh, I think we just opened up the door for a pretty cool lesson that not a lot of people know. These fibs come to be um, when you open up your software, and not everybody knows this, and you don't have to know how fibs work, but I think it gives you a little understanding of just how powerful they are. When you open up your software, guys, it measures every up and down in the market, every swing in the market over that 10-day historical period. It creates synthetic time frames. It goes up, it goes down, it goes forward, it goes backwards, and it does thousands upon thousands of calculations, doing Fibonacci projections, alternates off of each and every swing in the market. And it looks like this. These are all the lines before the algorithm kicks in that it looks like. And each of these lines is a reflection of fear and greed. Each one of these lines is a reflection of buys and sells. And then once the algorithm does its thing, it gives you these amazing areas. And these amazing areas are based off of what's already happened. These aren't like, oh, I think it might, let me do one measurement and see where it ends up. This is thousands of measurements creating this 45, 52 and a quarter. And you know because of what's happened where the market is likely to reverse, where it's likely to stop to bounce. And what you can do is you can take that unbelievable area with a couple other safeguards, right? The momentum indicator, making sure that the areas are not on the wrong side of the triggers. And this is really where it happens. So these areas where I say decisions are made are where decisions have already been made. And look at this. And this is freaking amazing if you ask me. So these divergence lines aren't fibs at all, right? But this is the exact precise point where the sellers told the buyers there's no way in hell you're going any higher. Does that make sense? And it created this loss of momentum. And look what happened. Holy smokes, 13 hours later, when the buyers got to that exact area, right? Push. They weren't able to stop the market, but Cav, we knew about this decision-making point 12 hours in advance, right? We knew about this decision-making point. I don't know when that one formed. 8 hours in advance. So these fibs, when the market reverses from them, it's really pretty powerful. And when it doesn't, when it kind of goes from nowhere, and let me see if I can find a good example of it. Dun, dun, dun. A lot of times you'll see these pivots that don't come from an area. They'll make it back to a mid band, and then they'll try to push down and finish the move. Don't quite make the fib, push back, continue the move. And that's something that you see a lot, and that's one of the reasons that bad tops and bottoms, woo, I don't have a lot of data on there. But that's one of the reasons why we're respecting these areas, because they create movement from decision-making points. And then sometimes they just push from nowhere for no reason. And that's why we don't say you're guaranteed 100% to win all the time, because we're not in control. All we're doing is we're taking these patterns that repeat themselves over and over and over. Paul, odds favorable, clear path, perfect entry, just didn't work. And I love that you put next, Paul, because that's really all you can say. Is next. I had the advantage. I had all three advantages. I had the best entry, and it just didn't work out. And that's a bummer. It stinks when it doesn't, but that's just the cost of doing business. That's a great looking trade. Cav, did all that rambling help a little bit? So a good top or a strong top comes from a fib, right? And the market can still reverse from anywhere. But this is kind of a good example. There's that overrun, and the buyer said, "Oh crap, we were supposed to go up," and they got just about to that precise moment, and the seller said, "Yeah, no, we really wanted to finish the move to 65. Sorry, guys." And then they'll make decisions again at 65. All of the sellers that have pushed it down this far, they may jump ship down here, and we'll see what happens. And if they do, the buyers might take back over, but we can identify exactly where it's likely to happen and then use that trigger line momentum to make a decision. Again, not a good bottom, comes all the way back to resistance. Large triggers never roll. Not a good bottom, weak triggers. We'll gauge their reaction, but it wouldn't be uncommon to see them finish the move to 56, especially when it's been railing down like this the whole way. There's always a fight in the market. Where your triggers are on which side of the fibs gives you an indication on whether it's likely to hold or break. This was the last trade you did yesterday. So you had momentum, you had a clear path, you took the perfect entry, and it just didn't work out so much, right? David, what's the likelihood that this one goes? With all of that momentum coming from a good top, every trigger line you have below resistance, you took the perfect entry with no divergence and strong triggers. David, I don't think you could have shown me a prettier trade. And to be honest with you, where did Paul's go? It looks like this one, right? So what does that mean? Does that mean that this look doesn't work? Because you showed me one and Paul showed me one. Well, and I think that you had reasons to exit. Divergence, trend change, that's okay. But David, you can't manage your accounts on fear, right? And let's do this. And these are the subtleties. I want you to look at how the market continued down with separation between the small and large. And I want you to see how it struggled when the small returned to the large. Do you see the difference between the two, David? One says, nothing's stopping me. One says, it's getting a little weak. And look at your smalls over here. They're starting to get inside. It's a little weak. Do you notice that all of your areas are above large triggers, not inside of large triggers? This becomes a key thing. When you're losing momentum, and your areas find themselves above the trigger lines or below the trigger lines for longs. What does that mean? It means that your bounce point, you wanted it to be somewhere in here, right? Somewhere where that price closes into those moving averages. What you've done is you put yourself outside of that window of opportunity. You are beyond that window of opportunity. You're actually, if there was a mid band in here, you're right where your stop should go. Does that make sense? And a lot of times, this is the son of a bitch. I didn't get it. I'm going to get it this time. I've done that. I don't know if you have. I don't know if I'm the only person in the room that's ever done that. I've done that. Man, that one didn't fit my rules and it kept going, so I'm going to take this one and hope that it works. And I think that you'll see that a lot when your areas start to fall outside. So for shorts, let's see if we have an example of that. No, and I think that was smart, David. But look at what happened here. You have those weak triggers, and your area's up here. And news is coming. This is the S&P. But isn't this beyond where you would ever want the market to go? And you have to pretend like that fib isn't there. And I think that we miss that a lot. But watch this. Closes to the triggers and bounce. Closes to the triggers and bounce. Almost makes it to the triggers. Continues down. Trigger bounce, trigger bounce. Areas are below the large triggers, and sure enough, it goes lower. It's a very common pattern. Inside of the triggers bounce, inside of the triggers bounce, inside, 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 inside. Those were all inside. That was directly inside. And then they start to get below. So it's kind of cool that you can recognize these patterns, right? And it just takes a little bit. And I think that you absolutely killed it by not trading into those areas. I think that was a great decision. Um, because that's a lot of support, isn't it? Even with the momentum. And you can see that it danced over here just by what happened. So, David, great picture. But that's one of those little nuances. When I notice that my areas find themselves on the wrong side of my large triggers, I am less inclined to take that trade. And there's one of those Cav, not from a fib, right? Not a good bottom. That divergence still pushes us up. And now we're in that termination condition where we're just kind of waiting to see what happens. Same thing down here. And crude oil inventories just came out. I don't know if it did anything to them. They almost made it to the fib. That was so close. And then they came back to resistance and the triggers didn't break. And now they're bouncing off of resistance. And we're just in a holding pattern. Good stuff. It's just rinse and repeat, guys. That's all we're doing. Rinse and repeat. Filling out your spreadsheet is one of the best ways. Which fib? This one? That fib is native to the 21. So when you talk about fibs, David, thank you for giving me something to talk about. On your large chart, guys, they come from 3 different time frames. They come from the 21, the 5, and the 13. So if you don't have that one, David, do you have tick replay activated on your large chart? Let me look at your picture. Whoops. So then I ask, the next thing that I ask is, how many days back are you on your chart? I'm 10. Are you 5? Are you 9? Are you 11? Okay, so you're 30. So your chart is taking 3 times the information that mine is to create fibs. So it makes sense that your fibs might be a little different, right? These are the things that I look at when people say that we don't line up. Days back has a lot to do with it. So watch this. If I change my days back to 30, 10 tends to be, whoops, 10, because there's so much information coming in the market, 10 tends to be pretty good. Um, for your 13, for your 5-1, I run 10 on mine. Um, it'll make them load a whole lot faster too. I've got mine calculating to 30 right now. I want to see what it looks like. But yeah, you can go through. I think that the standard charts that are coming from John Novak that he puts on the website are 10 days back. So if you don't want to go through and change all of them, David, you can go to the resource page. Totally up to you. And from the resource page, there is where you can run the indicators over, download the indicators and run them. And then I'm going to show you from the software user guide. What I would do if you really want to just start fresh is follow this right here. Delete your old charts, templates, and just start brand new. You'll have brand new everything, and the workspaces will be the most current. They'll be the configuration that John Novak thinks they're most efficient. Um, and then there we go. That's 30 days back. Does that look a little more like yours? Yep. I don't have time to wait for 30 days back. There's some people in here that run 5, but I think 10 is appropriate. Faster is better. And guys, this classroom isn't only to get you reading indicators. If you have technical questions, I'm here. There's that 50-50, right? So smalls are through, large are not. You guys want to talk through it? Go through the rules? All right, so I'm going to go to the KISS plan. Are you guys Remember, if you're not trading the KISS plan, that's okay. That's up to you. But the KISS plan is designed to optimize your chances of success. What a wonderful phrase, to optimize your chances of success. So, the 50-50 trade is probably the most lost trade. So let's just start and let's go through it and we'll check boxes, guys. Do I have odds favorable momentum on the 13-2? Remember, we're looking right here. Absolutely, I do. Are the smalls outside of the large on the 5-1? I would say that's a yes. No divergence on the 5-1. Son of a gun. How hard is it to not take a trade? And if you're saying, oh, that's just one, I'm still going to take it. Let me go through my list. From a good top or bottom on the 13-2. Guys, is this coming from a termination condition? Or is this in the middle of freaking nowhere? So that's two no's from the KISS plan, plus a little reminder that it's not your best option. And guys, if you focused on nothing more than what you thought to be a good window of opportunity, you were separated from your money rapidly. The hardest thing that you will ever do as a day trader is absolutely nothing when there's nothing to do. Did anybody take this 50-50 and get slaughtered? I hope you didn't. But if you did, I hope this is helpful. And then this goes back to what we talked about earlier, is that when I'm not coming from a good bottom, this 50-50 is less likely to work. And when I'm not coming from a good bottom, if the sellers really want to make it happen, that's where they're trying to go. They're trying to get down to that line that they established. They've got work to do. And we'll just leave that there. We'll see if it comes true. But this point right here is our next big obstacle. This point right here is where we're going to know whether or not the buyers were serious. And look at that reaction to the tick. Instantly, the market started going up off that divergence low. Is it possible that we just have to be a little patient? Is it possible that the advantage isn't present just yet and the money that's being made by other people isn't our money because it doesn't create a statistical advantage? I want you to accept that. Not every move is yours. John's old analogy, if you walk into the bank and you say, give me all the money, then you're a bank robber and you go to jail. But if you go into the same bank and say, may I have my money, please? Well, then you're a customer, right? Be a customer, guys. The market doesn't care what you want. Nexgen gives you the ability to know where the people that are in control might be making decisions. I give you a plan designed to keep you safe, whether it is strong triggers or clear paths. All you have to do is really just kind of sit on your hands and wait for the best of the best. And guys, that's a huge pain in the butt. That's a tough thing to do, without a doubt. Let's look at the timestamp. So at 10:36, this happened. It took them 3 minutes to come back and test it. This will be their second hit to test it. Let's see what happens. You guys are watching a fight right now. You're watching buyers and sellers duke it out. What's happening in this one bar here, look at all of it over here. Alan, I think patience is the key to just life, isn't it? Absolutely. Let's talk about it. Gap theory. What's it mean? I'm going to go to termination conditions, and I'm going to pull up this picture first because I do like this picture. And what Alan's asking about is he's asking about when price accelerates away from the large triggers on the large chart, right? Yeah, this one is recorded. I screwed up yesterday, Alinsky. But this one is going and has full audio. So if price accelerates away from the large triggers, what do I mean when I say price accelerates? Here's a great example. Price accelerates fast and far away from those large triggers, right? But the path isn't clear. That's kind of the beginning. Price accelerates away from the large triggers on the large chart. And when it does, if it bumps into something, whether it's a midband or a fib, and the large triggers are a full bar away, and that's where we use these reversal bar markers. If the large triggers are a full bar away, meaning if price hits this midband, and the large triggers remain above the reversal bar marker. Is there anyone that's not comfortable with the reversal bar marker, what it is? It is the point where this bar becomes an up bar. You'll see it as a gold or a white bar on your large chart. And then on the small chart, it's the point where this bar becomes a down bar. So if price accelerates and hits an area, whether it's a midband, a fib. If it hits a fib, guys, that's like textbook termination anyway, right? And the large triggers don't follow, this behaves as a vacuum. And vacuum is a word that a guy that I met 20 years ago that traded the software used. When it hits an area and the large triggers don't follow, it's like a vacuum. I don't know what a super fast trigger is, Alan. You'll have to discuss that with my brother. He's in charge of the software. I don't know. I don't know. I don't know how to build them. That's my problem, is I don't know how to build them. Ask it in Traders Chat. He's teaching a class right now. He will be until noon. But if there's a way, I can't imagine that he won't share it. It should be the same as NT8, if I'm not mistaken, but I'm not sure. So price reaches the midband, large triggers remain above the reversal bar marker. No shorts in that gap. Wait to see if it closes. Does that make sense, Alinsky? It's like a vacuum. It's Hooverville, just sucking stuff up to it. Price reaches resistance, resistance, even this one that it seemingly turned to support, and your large triggers are all the way down here. So even though, excuse me, this looks like a good bottom, right? This looks like a strong bottom. Let's go long, let's go long, let's go long. That vacuum back to the large triggers after hitting an area says, dude, don't try the long yet. Sit on your hands. Wait a second. Let's see if it snaps back. And it's pretty cool because it's not necessarily a trade entry, but what it is it's this understanding that you lose an advantage, right? And there may be a point, we talked about it yesterday, there may be a point where you start trading this snapback using a couple different charts and some indicators to get you there. But as a brand new user, all this does is it says, man, don't do it yet. Look at the term holding, guys. Once again, man, I love this stuff. It's not a confirmation of direction or momentum. It has nothing to do with either. Has nothing to do with either. All it is, Alan, is large triggers are a moving average, right? Price comes off of resistance, goes all the way down here and hits that fib. Look how far away the large triggers are. The large triggers are up, the trend is down, the small triggers are down. This says even though you're coming from a termination, dude, don't take the short. You're going to snap back. Does that make sense? Don't give it more power than it has. And a lot of people do that. I'm not saying that's what you're doing. Price reaches resistance. The large triggers were a full bar away. Even with odds favorable momentum, if you try to long somewhere up here, you got run over. Let's find another one. Price snaps all the way back to the midband area. Large triggers don't blink, full bar away. If you try to short thinking you're coming off a good top, you got slaughtered. Price hits yellow one to ones, mid band, large triggers don't follow. Sure enough, it comes back. Isn't that awesome? How often does this pattern happen? All the freaking time. And if in the beginning all you do is use it as a safeguard, I'm not going long. Like this is awesome, right? One to ones, everything rolls, strong triggers. If you don't believe in termination conditions, the gap theory just reinforces that it's too soon for a long. Great question, Alinsky. And then Alan, I wanna say that I have an answer for you, but I'm not sure. Oh, you're welcome. Thank you for the great question. False, false. There you go, Alan. I knew I'd seen it somewhere. I think that's it. Well, that may have gotten rid of everything on my charts. But I think you change it from 1.9 to 1. I just hope I did the right one. You still may want to ask John about it just to be sure. I am not the tech guy, but I believe that's going to get you in the right direction. Worst thing that happens is you just have to change it back, right? Gary, termination creates a full reversal. You trade directly into a termination condition and it stops you out. You don't believe it, so you go long again and you do wonderfully. Can we talk about the patience piece, Gary? And I don't know what's going on your 13.2 with all the triggers. That's kind of kooky looking. I'm not sure, but it doesn't look right. Maybe you're adding stuff. Gary, just directly into terminations, 100%, right? It's saying up, but that fib has already held twice, and you're just caught in that area. And whatever this indicator is says down, 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 down. Um, this is the I hope it goes up trade. This is the damn it didn't go up stop. This is the get back in. I'm so damn smart. I know it's going to go up trade, right? But nothing has changed between getting stopped out and your new entry. You're below everything here. You're below everything here coming off a term. I hope this makes sense. Let's talk about the patience piece. Let's talk about doing nothing when there's nothing to do. And let's talk about getting lucky creating short-term success, but potentially long-term failure. Gary, what if you waited for everything to roll? You waited for that confirmation. You waited for smalls, large, synthetics, everything to go up, and price gets above your trouble spot and pulls back to it. It's the same entry, the same price. Rather than hoping an area breaks, you allow it to break. And Gary, you are exactly like everybody else in the world because when your chart reading starts getting good, you start predicting. And this is a prediction. And this is a prediction. And that's a confirmation. And I don't know what this is, but I don't know why you're giving yourself more stuff to think about. Too many minds sometimes. I like the long, I just like it better from here, and I think your exit is solid. Let's use those fibs, right? Let them roll, right? They were up here, but we're still trading in determination conditions. Um, Alinsky, right? Great termination creates a reversal directly into a termination condition. Ugh, and look at the bounce it creates. And then it comes right back into it. And it says up, but doesn't it make sense? that can create a bounce, especially without the best momentum. But this was your problem area, right? And you come up, and here everything is up, everything is tight, everything's starting to break. At least this one gives you a fighting chance. Does that make sense? This one's just a little early, and it's divergence from a termination condition. It's not even 50-50 yet. This one at least says, all right, everything is up above this problem spot. Let's see if we can go. Um, I don't think, I think Gary's thinking was correct. Great termination, higher divergence. I just think that's your best entry. And notice that it's the exact same price as this one. This one fights everything. This one has triggers down, everything down. It's a pivot stop out at resistance. Momentum is against it. We're below everything. Um, Gary was committed to the long. Been there, done that, my friend. Check it out. Weak triggers at support. 3 divergences, 4 divergences, same price range at support. Pretty cool, right? Hits resistance. Large triggers are still down. Maybe too soon for a long. Definitely not a short. Let me pull it back up. And this is a pretty cool thing. And you just open the door for something. Nope. Literally, price is just price. Price is nothing more than the entry price. Bum, bum, bum. On the NASDAQ, I'm not sure what you're talking about. Oh, never mind. I'm with you. Let me go back to it. Yeah, 3 to 4 divergences in the same price range. Look at all that right there. That's all in one area, right? And then do you remember from termination conditions that 3 divergences in the same price range may terminate the trend? So what just happened there is very much what happened there. And then if you look at it, isn't that amazing? They retested, none of the triggers break, divergences confirm it, and you have 3 divergences in the same price range on your NASDAQ, and you have a 50-50. And it did pull right back to support, but there was one divergence if you're one of those ones. So, um, yeah, just let it do its thing, right? Jose, 50-50, tail into momentum, perfect entry. Beautiful, Jose. And I like this recognition. The first divergence gave it a little push. The second one, they didn't lose any momentum. And your 35 fib lines up with that perfect blue fib that is almost completely broken. Great trade, Jose. And then Gary, same one. I'm not sure what the target's from. Try the long, get stopped out. Try the long. I guess that was the earlier trade, maybe? Oh, much better. And then you took your exit right at Jose's entry. Jose went long where you exited your previous long. Um, that's hard to do. It's hard to hold, isn't it? Especially even though it's coming back to an area inside of favorable large triggers. And who asked me about trailing stops earlier? That was, I don't think they're in here anymore. That was Jaybird, Baird. Um, Getting your stops where the market shouldn't go, right? Not at support inside of favorable large triggers when everything says up. putting them below that window of opportunity and waiting to see if there's a bounce if you're going to hold. Great trading, though. Both of you guys. Nicely done. And then, guys, this is a good example of how your plan will alter. You may say to yourself, with three divergences in the same price range and this much momentum and the potential to break, I'm willing to fight one divergence with this tiny little area. Doesn't fit the KISS plan, but that is the natural progression. Pivot stop out is a good term. Couple it with three divergences in the same price range, it's solid. Guys, that's a termination that created the full reversal. That's a good bottom. That's the best momentum look you could ever have. That's strong triggers in an area inside, but that's your challenge right there. Not everybody's willing to take that one with that look. Weak triggers, three divergences in the same price range, pushes right to resistance. Pretty amazing. Weak triggers. Alinsky, do you see where the large triggers are? We hit these fibs, large triggers. Nobody's going short, right? You can if you want. Do whatever the hell you want. It may go down, but it may close that gap. I don't know. It may. It might not. But if you know that that's the potential, if you know that's the potential, and it's also support with no triggers through it, right? Double whammy. Let's see what happens. This is so exciting. I think the challenge is I start looking at my chart and I'm like, oh, it's red and the smalls are below the large and I can't wait to go short. And I completely skip the idea that none of my triggers are through support. I completely miss the fact that my large triggers are a full bar away, and I just hope that it goes down. I've done that. You guys will probably do that at some point. And especially if it does go down from here, Alinsky, then you're like, oh, gap theory is crap. And you'll fight it next time. So it's not about what happens right now, guys. It's what happens if you took 100 pictures of the gap theory. How many times would it close the gap? Let's go back and look. There's one. There's two. No gap theory. There's three. So we're 3 for 3. Not gap, not gap. That's 4 and 5. 5 for 5. 6 for 6. Isn't that kind of cool how you can go back and do that? 6 of them did. That one didn't count. There's 7. That might have been the gap theory in the moment that didn't. So you go back and you start studying this pattern and you say to yourself, it takes away my advantage. So I sit on my hands. Tony, I can't in here. It's just momentum. It's just momentum. My brother is teaching a class right now using a 21 range and super fast triggers and different looks and stuff like that. And I'm pretty sure he would break my kneecaps if I tried to teach what he's teaching in this private room. Um, it's just momentum, man. Momentum keeps you in trades. Loss of momentums give you the heads up to get out of the trades. Um, and there's a little more to it, and I apologize that I need my kneecaps. They're already busted up. I can't afford some big brother. If you've seen my brother too, he hits hard. But it's all momentum, guys. Remember when I said, um, let me close that out. Do you remember when I said, duh, 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 let momentum be the one? Let momentum be the thing that gets you into trades. Let momentum be the thing that keeps you in trades. Guys, there's a reason that momentum is rule number one. It's because it's hard to stop a market that is absolutely freight trading in one direction. And it creates advantages. And if you go through, and Tony, it's no different using just two charts. When I have odds favorable momentum and a clear path, it's likely to make it, right? When I have odds favorable momentum and a clear path, and that's it, two charts, the market's likely to continue in the direction of the trend. That's when I hold. And Tony, you've got to read NASDAQ aggressively because it happens fast. So if you don't have the best momentum, if you're hoping that an area breaks, you find yourself taking an ass kicking real quick because you incorporate a lot of hope rather than a quick chart read. And NASDAQ takes a really quick chart read. Alinsky, the only thing to really know about the mid-band on a small chart is if it's inside of favorable large triggers and the rules are met on the large chart, it's an area that can create a bounce. It's an area where the market can be um, where a trade comes from. That's it. That's all it is. It's rule number three. Some of them may be dead, Joel. Some people may have deleted. So let's go to small chart. And let's go right here on crude oil. The only significance the mid-band has is it may be the spot for the bounce. That's it. It's green because price is trading above it, and it will turn magenta if price is trading below it. So visually, it keeps you thinking magenta, potentially resistance if the rules are met, green, potentially support if the rules are met. But the only thing that it's really used for is it creates a bounce. It's a place for a bounce inside of favorable large triggers for those trend trades. It's just a moving average, but when the moving averages converge on one another, it creates an advantage. Does that make sense? There's a gap theory again. Guys, all you have to do is ask questions, and you guys are doing a wonderful job of it. The more questions you ask, the smarter you're going to get. It's so difficult to sit on the sidelines and hope to absorb it all. I'm gonna tell a story, then I'm gonna take a break because I like telling stories. Back in 1990, good Lord, seven, I went to a mechanics institute in Phoenix, Arizona. I went to Motorcycle Mechanics Institute. I'd been riding motorcycles forever, and I thought, you know what? I love mechanics, and I'm not smart enough to be a mechanical engineer, so I'm going to fix motorcycles. And I go to this to this class. And when you go to a mechanics institute, what you find is that a large part of the population are vets, which is awesome, VA loans, getting them in. But the other half of the population are great big scary Hell's Angels that just got out of prison. And it's a prison rehab, teaching them a skill, try and keep them out of prison. And the first thing that they make you take is theory. And that's what I teach, guys. I teach theory. I teach 101. I create this foundational thing. And I'm sitting in this class, and there's about 50 people in this theory room, and there's one instructor. And the instructor says something about camshafts. And this is pretty cool. He's talking about camshafts, and everybody's in the room, and they're like, oh, yeah, camshafts, aha, valve lift, ooh. And I raise my hand, and I'm on the front row because that's the kind of student that I am. And I raise my hand and I say, what's a camshaft? I had no idea. And I don't know if you guys know what a camshaft is. I had no idea at all. None. Um, and 49 people laughed. 49 people laughed at me when I asked this question. Um, and that's cool because by the end of my schooling, a year later, um, I graduated in the top 4% of my class because I'm an overachiever. And I'd say 80% of these assholes either got kicked out or dropped out. Um, and it was terrifying to ask a question. But if you don't ask questions when you don't understand, you're not going to get to where you want to be. And I'm telling you, ask every question. Hey, Alinsky, there was your gap theory on the S&P. What do you think about that? Pretty cool, right? It just happened again. Yes, is a crazy blonde. Nasdaq's a crazy redhead. Amen. Um, man, you know what we did the other day, Alinsky, that was pretty cool? Is Gary, what did we pull up? Feeder cattle? We pulled up feeder cattle one day and the patterns worked. We pulled up orange juice. We had a trading places moment and pulled up orange juice and the patterns worked. Um, but it's the same. It's patterns, Zelensky. That's all it is. And if you can't find them, and let me tell you another story before I disappear. I had a gentleman, and he was mad as hell. I'm not gonna lie. He was mad at me because he said that I was full of crap. Everything that I taught was full of crap. He can't find one of these darn trades that I was talking about. Um, and that's cool, guys. It doesn't hurt my feelings if you guys think I'm wrong. Just prove me wrong. So we talked about, I said, all right, well, let's talk about what you're looking for. Hey, Trader JP. I said hi to you earlier, but I guess you were off making money. Nice to see you. Um, Guys, when you look for everything, you tend to find nothing. When you try to catch it all, you catch very little. And that's what this gentleman was doing. And he was having challenges. And he basically told me in no uncertain terms, Mark, you're full of shit, and Nexgen is full of shit, and I'm so angry that I spent money on the software. And I don't mind saying that because people go through this sometimes. And I said, hey, let's talk about what you're looking for. Let's talk about what you're looking at. Let's talk about, where we're having challenges finding these trades. And he goes, I'm trying to do this and this and this and this and this. And he had sat on the sidelines or he sat at home and he tried to teach himself. And he had some basic fundamental misunderstandings about some of the rules. Most of them regarding those 50-50 trades. And he wasn't embracing at all the idea that those trades could go wrong. And he was mad that he was losing them with multiple divergences and not good tops and bottoms. And I challenged him. I said, I want you to do this for me. And guys, there's probably been 10 of you in this room that I've given this challenge to. I said, do me a favor. And guys, check this out. If I take off all of the fluff on this plan and I space it like normal people space their papers, whoops. This is half a page of searching. This is half a page, guys. This is it. And I said, do me a favor. Give me 5 days where all you do is look for this, where all you do is follow these rules, just these rules, 5 days, right? You're already mad. You're not making money. Why not see what happens? And about 7 days later, after maybe 10 days of playback and 5 days in the market, he said to me, and guys, this is a victory for me, and it was amazing that he came back and did this. He said, you know what? He goes, you're right. He goes, I was looking for every trade. And because of it, I was missing the good ones. He goes, when I told you it never sets up, he goes, these high probability trend trades set up 4 or 5 times a day. I just wasn't patiently waiting for them. These 50-50 trades with perfect conditions set up 4 or 5 times a day, and I just wasn't waiting for them. And he came in and we rewrote his plan and he adjusted it a little bit, but it looked very much like this. Um, and then he came in the room for a little bit and he showed his trades and he got a little feedback on his new plan. And then he did it less often and less often. And I haven't seen him in months. And I know I've kept up with him. He's trading very successfully right now. But he had to keep it simple and he had to keep it focused, guys. And that was the key, is stop trying to find every twist and turn. Did it, Cav? Isn't that amazing? My brother used to do that. I thought it was some voodoo stuff, but it was just recognizing patterns. And it may not get there, but doesn't it keep you from hoping, right? Um, and Trader JP is right. The software is shit until you spend enough time with it, and then it turns into gold. And it's funny to put it that way, but it's true. Um, has anyone ever played golf so poorly that they went and bought new clubs expecting to play better? When we used to race motorcycles, if we blew a turn, we'd look at our shifter, like missing the shift is what caused it and not the fact that we just screwed up. We've all done it. I just lost that drag race. I probably need a bigger engine. It's not my reaction time. We love to blame the tools, guys. The second you take accountability for your results, you'll be amazed at how your results change. The second you start focusing on the process. Alinsky, I endurance race 600. So we had a YZF 600. We would do 4 to 12 hour endurances here in Texas. Yamaha. I started on a Kawasaki. I was a Kawasaki mechanic and I took a bike that had a lean on it. I took a 600. That was my first race bike, but we upgraded. Raced with our dad, actually. It was fun. My father got me into racing, which is pretty cool. But there's parallels through anything that you want to do, guys. And I hope this isn't insensitive. Guys, it's not the arrow, it's the Indian, right? You're not missing your shot because the gun's messed up. It's because you're a bad shot. VMAXs are terrifying. I love VMAXs. Those things were just like the old Kawasaki triples that felt like they had a hinge right in the middle. I love it. Um, so, guys, the software is the best software that you could have. It really is. The patterns repeat themselves all the time. And I think that, Cav pointed it out. We knew because of the bad bottoms that the sellers had a target, right? And the buyers just keep stopping them. And there were opportunities in between. Was this not an opportunity, Cav? I think you said no short. Yeah, probably not. There was some momentum style stuff in there, but not a high probability trend trade. And they're still fighting, guys. There's a fight every day. The key is just put yourself on the right side of the fight. And I love telling stories, guys. And you've probably got something that you do every day that you're like, oh, this is like trading, right? And if I would just XYZ, my success rate would go up. If I'd stop hitting on 17 because the dealer has an 8, I'd probably win more blackjack. And just all the little things, guys. Rules are in place to keep you safe. And sometimes it's just not your money. But can it be done? Yes. Is it the best software ever? Yes. Is the education the best in the world? I think it is. There's too many successful people for it not to be. The key is you have to find your groove, guys, and it starts with a very basic approach. It starts with reading the indicators, and it's a whole lot of practice. It's a whole lot of practice. Um, and then you turn that practice into execution. And then you turn that execution into a plan. And guys, that's got to be it. You can't put the horse before the cart. It rarely works. Not a good bottom, right? Triggers get through the area, hits resistance, gap theory, and I'll be damned, they make it to the next area. Guys, I used to go long right here wondering what went wrong. I'm not going to lie. I used to take probably this long right here, hoping that it worked. While everyone else, when Trader JP went short and made money all the way down. And I had to do that 1,000 times until it finally stopped eating my lunch. Odds favorable, 50-50. One divergence pulls back. Is it going to pull back again, guys, with all that momentum and a clear path? It might. I'm coming from a termination that created a full reversal. I've got the best momentum look. My triggers are above resistance. It's behaving as support. Isn't that a pretty decent recipe? Alinsky, there's your gap theory once again. Patterns repeat themselves, guys, every day. All right, I'm going to take 5 minutes. I left my water in the other room. Um, Guys, let's kill it in the last hour. Tell me what you're doing. Tell me why you're doing it. Tell me what you see. Tell me what you want to talk about. I want you guys to tell me what the last 40 minutes of class is going to be. I'll be back in about 3 minutes. Well, that one didn't make it. I guess that wasn't my money, huh? Not off of the fib. What do you guys want to talk about? All right. So, guys, it was 10:34. You made it. Cav, how did you know that was going to happen? Isn't that amazing? I'm telling you guys, my brother used to floor me. I would go long, and he's like, yeah, we're probably going down to here. And sure enough, it did. Kind of cool. And then Cav, momentum on the large chart. You take the little pullback, and sure enough, off it goes to 56. And you took this one right here. Nothing blinked on the pullback, and you said, we'll take it. And that's kind of outside of the realm of high probability, but that's a great chart read. And that's that next level, right? And then that one right here where it was weak and didn't hit anything. Was there an opportunity in there for somebody? I don't know. Let's look. That was you right here, right, Kev? Small stayed below the large. Everything was down. Get a close below the smalls, and off it goes to the races. And now 56 is broken, and it looks a lot like support. Maybe an opportunity right there. Not high probability, but pretty cool. And guys, all it is patterns. Here's your S&P, same thing. Termination, full reversal, odds favorable, nothing in the way. Reversal bar printed. I've got an order waiting just below the area of resistance inside of favorable large triggers. Where's my window of opportunity? That's it. It is 1 point wide, 6 ticks wide, guys. Which means that if I take this trade and the market comes to that yellow line, I don't want to be in it. I have defined where the market is likely to continue. I have defined where the market shouldn't go. Give me a Y in the room if you see it. Guys, I'm not telling you to take this trade. All I'm doing is I'm talking about this very basic plan. The idea that when I have odds favorable momentum, when there's nothing in the way to create a bounce, all I'm doing is I'm hopeless at this point. I'm helpless. I could go take a shower, pour a cup of coffee, go play video games. What am I explaining, Cav? Let's take a picture. All right, so let's look at it. I'm going to go through the whole process for everybody. Termination, down it goes. Odds favorable, clear path. Can everyone see how the large chart has done its job? So far, so good, everybody? Large chart says look for an entry. All right. At the time of the reversal bar, there's my first one. I'm going to identify from the highest point of my triggers to the lowest point of my triggers. Can you see the black box? Make that a little thicker. So inside of this black box is where I'm looking for my window of opportunity. This is where I'm looking for my areas. My window of opportunity extends from the lowest point of resistance to the highest point of resistance inside of the favorable large triggers. So far, so good? My limit order is a tick or two below my lowest point of resistance inside of favorable large triggers. My expectation is that this is probably my most likely bounce point for continuation down. I'm putting a limit order a tick or two below it because I'm not going to trip over a couple pennies, hoping to save a few dollars. Does that make sense, Cav? Which means I may not have gotten hit here. Sure. For the entry, let me find my internet here real quick. Let me find the entries real quick. It might, Ron. It might not. There's your best picture, Cav. You will have placed a limit order at 79.21, top of the window. That's the one that defines exactly where it goes, right at the top of the window, at the highest point of support or the lowest point of resistance. Ron, the part that you're leaving out is it's not coming from a termination. I think that's the key to the success on that one. And then when you look at this one as well, absolutely, Cav. I've actually got pictures in this checklist with the pictures on it that helps define it a little bit there as well. And then inside of my spreadsheet that I dropped in the room, it talks about exactly where your limit order goes as well in the upper left-hand corner of it. So let me put that in the room for you as well. But there's tons of resources. And then we can even, and this is kind of a cool thing to do. Oh, Ron didn't get us. Is let's find one real quick. And this is, I'm going to show you guys a great way to study this. One of us will be right. Trying to figure out where that one is. Let me circle it real quick. And Cav, this is a fun one that I've done in the room before, and I think it helps people a lot. All right. And guys, let me know if this works for you. So let me take off the cheater circle. Talking about entries, guys. Everything starts on the large chart. The background is green. I'm looking for longs. Give me a Y in the room, especially new users, please. The large chart, the most current bar, is showing me odds favorable momentum. It's showing me that best trigger look, that one that says the market is likely to continue in the direction of the trade. Give me a Y if you see it. Cav sees it. And then I'm looking to make sure that price has not reached this key Fibonacci area. The top of the bar hasn't hit it. Guys, I still have a clear path. I still have room to my target. And a lot of you are saying, but Mark, there's only a couple ticks, right? Remember that we're going to buy a pullback on the smaller, faster chart. So I have odds favorable and I have no termination conditions. So I turn my attention to my smaller, faster chart. And I'm waiting for a reversal bar. And at the time of the reversal bar, I'm going to draw a square from the top of my triggers to the bottom of my triggers. Give me a Y if you're with me, guys. What we've done is we've identified where we want to look for our entry point. And this is where some people get stuck. They're like, okay, I'm going to get in at the triggers. But no, your window of opportunity extends from the highest point of support, which happens to be a mid-band here, to your lowest point of support, which happens to be a mid-band. How cool is that? So my job is to right-click, and I'm just going to use a horizontal line, and I'm going to activate a limit order, a tick or two above, because remember the large chart said up. The large chart said clear path, so I'm a tick or two above the mid-band. And now I'm in a holding pattern. I'm waiting to see if it comes. So let's see what happens. The market's coming down. It's coming down. Notice how the mid-band is coming up. It's okay to move your entry a tick up. Oh no, and it didn't get me. Should I jump in? Remember, all of this is happening in this one bar. This is just fluctuations, right? I'm gonna hold my ground, and I'm gonna wait. Oh, and now it's coming back. My mid-band's come up a little bit. I'm gonna put my entry up a few ticks. I'm gonna go about 2 ticks above the mid-band. Cav, is this helping? All I'm doing is waiting, right? And here it comes. Oh, and it got me to the tick. I'm in the trade. This is why I go a tick or two above. And the cool thing is, and this is my favorite part about it, is once I get that reversal bar from the area I'm looking to trade from, I'm 2 ticks below it. That's my risk. But this is why I go a tick or two above. because it just might not make it because this is screaming to the upside. Pretty cool, right? So you guys can go back and you can practice these entries if you wanted to. This one never made it. It came so darn close, but it just didn't make it. And then David, people hate it when I do this, but I'm going to do it. Are you ready? David W., this is for you, brother. Because we saw this one earlier, right? Do I have odds favorable momentum? Guys, rule number one, I want you to get in the habit of talking these rules through your head every time you see it. Not just yes, but hell yes. That's a great look, right? What about the second part? No termination conditions. Guys, rules met on the large chart. Give me an N if you don't think so, or if you're not sure why. Rules are met. Odds favorable, no terminations. I didn't reach the key area. Reversal bar prints. Let's draw our box from the highest point of the triggers to the lowest point of the triggers. Is everybody with me so far? We're looking for the window of opportunity. We're looking for the areas inside of favorable large triggers. I'm going to use my section tool here real quick. And I'm going to see if I can zoom in just the section. Nope, hold on. All right, guys, so help me out. Do I have a fib? Do I have a mid band? Do I have a yellow 1-to-1 inside of that area that we were looking for? From the top to the bottom, are there any areas in there? There's not, right? What does that mean? That means that rule number 3 isn't met. That means that if it goes beyond that, well, shit, it might go lower. Rule number 3 for the win, guys. And I know that that seems, but Mark, it's a tick or two. But it's a tick or two below. What if it were a tick above? I still have that moving average running support. But when it's below, great job, David. And then this is one of those instances where you wait for everything to roll and change and maybe look for that continuation a little bit. But isn't that outstanding that you have rules that are designed to keep you on the right side of things, that are designed to help keep you in a position where you're able to avoid some of the simple pitfalls? And it's just rinse and repeat, guys. That's all it is. You've got to give it enough shots so that it becomes second nature. You've got to take enough pictures so that you recognize it in the moment. There was an interview. I say the same damn stories all the time, it turns out. There was an interview with Tom Brady, and it was the second half of an interview that they were having with rookie quarterbacks in the NFL. And the quarterbacks, every one of them, every rookie was like, oh my gosh, it's so fast. It's so fast. This game moves so fast at this level. And then they call Tom Brady over and they're like, Tom, what do you think about the pace of play? And Tom's like, dude, it's like slow motion. It's literally like I know what's going to happen before it happens. Guys, that's repetition. The market's no different. You'll get to the point to where it's slow. Not just that it was outside, David, or I'm sorry, D-Rock. Not that it was outside. I looked at the wrong name. Sorry. That it was below. Because moving averages, right? The whole idea is that with moving averages, they correct and continue with all the momentum. That's why we're looking for areas inside of those favorable large triggers, inside of those moving averages, guys. We want a bounce point inside of those triggers. And if this is your moving average, and price has to blow beyond it, and price has to go beyond that moving average to hit an area. Didn't it kind of deviate it? Didn't it go beyond that moving average? Didn't it break that average? Guys, these are things that just repetition and taking pictures. And I can tell you right now from experience, when you do this, when you use this spreadsheet and you start really focusing on what you did yesterday and compare it to what you're doing today, these patterns start to click, right? They start to click. And David, it's okay. And you start thinking about things different ways too. I used to think about termination conditions as termination conditions. That's it. It's just a line. It could stop the market. And then something in my brain clicked and it said, well, shit, these are where decisions are being made. These are where buyers are going to stop buying and when sellers are going to start selling. And these are where profits are going to be taken. And why on earth do I want to get caught in the middle of a decision-making process when it's so much easier away from those points where the decisions are made? One of the reasons 50/50s, where it barely scrapes above an area, fail so often is because you're still in the decision-making zone, right? Right here, buyers and sellers made a decision. Do you guys see this? Half the sellers said, I'm taking profits. I know about this key area. And buyers said, oh, what a great spot to go long. And their absence of contracts and their addition of contracts got it right back to this key resistance where the decisions were made again, guys, and the sellers won that decision-making process. And your triggers told you who was going to win. Don't get caught up in it. Wait for the best, right? Wait for the best. Here it is again, guys. Your mid band is beyond the moving average. 3 divergences in the same price range. At this point, I don't know if it's going to be the mid band, right? I don't know if it's going to be resistance. I don't know if it's going to be these one-to-ones. Guys, I have no idea. The only thing that I'm sure of is that I don't have strong triggers and I do have 3 divergences and I just don't know. Does that make sense, everybody? And if you just don't know, does it make sense to risk your money? Wait for a statistical advantage. And then Cav, you're just, when it's trending, it breaks, you pull back. Cav, can I teach you something? You're going to love this. And guys, this is just a pattern. When I get into trouble and I get a couple divergences, very often that second divergence can push beyond the previous pivot. Great place to put a stop. So Cav, you nailed it. Your stop was perfect, right? This look right here lets me know I may have to give it just a little bit of breathing room. I'll let these one-to-ones protect me, but I'm not going to get super, super tight on it. And then letting the large chart lead the way. And you said you're looking for 16,132. That's a good looking term on crude. 16,132. What if this is the one that ends it? I certainly wouldn't hold. And it may go, right? 16,132 is just above that one. But I've got momentum up, I've got triggers up, I've got no divergence, I got everything going, 3 in one spot. Do you remember the dance, Cav? Remember this one? Where they fought like hell before the sellers took back over? This looks similar, doesn't it? Just because it's a bad bottom doesn't mean that it's guaranteed to continue down. We're still not fighting triggers. We're still not fighting momentum, right? Maybe we're not going long into a fib that hasn't broken. Maybe our 50-50 is less probable of a win. But just because it's a bad bottom, it's not guaranteed to have the floor drop out, right? This was a bad top. See what I'm getting at? Don't form opinions. Trade the moment. Oh, I hate predictions. Hold on. There's really only one way to settle it. Will it go to 16,132? Let's find out. I mean, let's make this conclusive. As it sees it. Indicators are great, guys, but Magic 8 Ball says yes. And that's kind of what predictions. They're worth about as much as that Magic 8 Ball. Because we're not in control, guys. We are not in control of the ups or the downs. We're not in control of the buys and the sells. We're not in control of anything. This guy's in control. This is the guy moving the market, guys. This is the one that has a dude with a cello walking behind him going, do-do-do-do. This guy has millions of dollars in his account. This guy can create such an impact in the market that it creates a trend. This guy can push a market so hard that it creates momentum. Our job is to be the remora, guys, and remoras don't make predictions. Remoras don't swim around sharks going, hey, I bet he's going to eat a tuna. They just wait for him to eat the tuna. And then they take their little chunk and they're well fed, guys. Get in the mindset that the market doesn't care what you want. The market doesn't care what you think. It doesn't care what you predict. But your indicators will give you the information you need to have a statistical advantage to trade a pattern that has been proven over time to win more than it loses, right? And if your patterns have not been proven to win more than they lose, why on earth are they a part of your plan? That's just ridiculous, isn't it? If every time you eat a cheeseburger, someone pokes you in the eye with a sharp stick, eventually you got to stop eating that cheeseburger, right? I'm 50-50 from a bad bottom. I've got areas inside of favorable large triggers, but the KISS plan says, maybe not. Totally up to you guys, though. We got a few minutes. D-Rock, if it helps with the pucker factor, absolutely. Um, I, I don't know if it's a good idea. It is what it is. The trades are the trades, right? The only person that knows whether it's a large contract or a micro contract is you. So if you think you can trick your brain into not puckering up with live money because it's a micro, go for it. I can tell you right now, one of the challenges, and I don't know where you're at in life, but I can tell you right now, if I'm walking down the street and I drop $100 bill and it goes down the gutter, I still eat. My bills still get paid, right? There is zero fear of repercussion from a $15 loss. MCL, D-Rock, MCL, each tick is $1 instead of 10. But MCL tends to lag a little bit. The MES is one of the best as far as step for step. But there's also the micro NASDAQ if you want to do that. There's micros on everything. Um, and it's typically 1/10. So where the S&P is 12.50 a tick, the MES is $1.25 a tick. The MCL is $1 a tick, right? But it's not about the money, you know. It's shit. I could lose $100. I'm good. I don't care. It doesn't affect me one way or the other. But am I losing it taking the correct trades, or am I losing it taking the wrong trades? And I think that that's and you know what? It's right. And it's the same reason that people break the rules on Apex so much. It's because when Apex runs a sale and you can erase all of your stupid for $18, it's easy to do it, right? It's easy to just reset an account. It's easy to clear the simulator. It's easy to not worry about $20. It's very much, I won't say who, but I was married to somebody, still am. And the mindset is if I buy stuff that's only $3 a pop, it doesn't matter. It doesn't matter that I bought 3,000 of them. They're only $3, right? The math doesn't add up. So focus on the process. Focus on the advantages. And if you need a micro as you dip your foot into live, that's great. Or D-Rock, I know that you don't want to do it because you just want to trade yours, but do an Apex account and see if you follow rules when the switch flips and it becomes real. What's the worst thing that happens? It's an $18 investment. You're still trading a full contract. You have everything to win and nothing to lose, but it'll let you know how you're going to react when it's real. Just something to think about. And again, I can't say it enough. I don't give trading advice. I give indicator reading coaching. That's my thing. But I've worked with a lot of people over the years, and I don't know. Mike Tyson said, maybe fictitiously, everybody has a plan until they get hit. And until you've got 1,000 reps, every time you get hit, it stings, and that's okay, right? And you become a trader once you pass and keep a prop account. You've got to keep the account, right, JP? Passing, it's not hard. First one I passed, I blew out the next day. I'm not afraid to tell you guys that. I passed it. I was so damn excited that I changed everything that I did. Everything that I did to pass it, I changed. And the results spoke for themselves. I was done. Hey, look, we didn't know where it was going. It's still going up. I got to tell you guys, though, you're pretty freaking amazing. And I appreciate you being in this class. And I love the conversations. I absolutely love the idea that people that are like-minded can get in the same area, that we can share the stuff that has made us successful, that we can share the stuff that's created challenges. And if you're a parent, you know that you've told your kids, don't do that. It's a bad idea, right? And this is a big part of parenthood. Just hoping and praying that you can stop your kids from making the same mistakes that you made. And then you realize about the time they're teenagers that you can't, that it's impossible. Just like your parents tried to stop you, you've got to go out there and you've got to make those mistakes, and it's a part of growth. And when you share those mistakes in the room, you can get a little bit of coaching on how to avoid them. Because guys, I'm like that parent. I've made every mistake that you're ever going to make. Most of them 5 or 6 times minimum. And my whole goal is to get you to a point to where you don't have to suffer like I did as I began trading. Not that it's a suffering thing, but it's very much it's a growth process. It's a confidence process. It's a trust process. It's like building a relationship, right? Think about where you're at 30 years in with your wife compared to when you first met. D-Rock, no. I've given up trying to figure it out. I know that if you take orders and then you move them around more, um, it creates a likelihood, or you move stops and stuff. John was talking about that. Maybe because crude oil, when it's the right trade, it tends to straight line pretty quick. Maybe. I don't know. I'm not sure. But if your ES is crashing more, just break it down and build a new one, right? Look at that weak triggers. But it is a clear path. And there's areas inside. No, D-Rock, that was the worst answer ever. Sorry. Um, and look at that, 50-50, multiple divergences on the NASDAQ. Any guesses? Did the Magic 8 Ball call it, Kev? It may have. Without using limit orders? So if you have, and let me see if I'm asking if I'm doing this right. So if I'm in a trade, I'm going to sell it. I'm not saying that this is a sell, guys. It fights everything. And I want to just close one out but keep one open. I can grab one of my targets and take it to the other side of price and click, and it's gone. That's the easiest way I know how to do it. And like if I want to get out of the trade, I can either hit close, but if I put my stop on the other side and click again, it should fill the order on the stop. Of course it's not, but there we go. That's the easiest way I know how. If you wanna ditch one of your contracts, you can move it to the other side of price and it'll fill almost instantly, typically. Does that answer it? Cool. Because sometimes you want to adjust, right? Sometimes maybe you want to take quicker profits. And I think that that's a big deal. Is don't be afraid if conditions change to move your stops, right? To move your targets. I thought it was going to go to 31.25, but then I realized that I was fighting everything. It's okay to hit the close button. Or normally I hold for this many ticks, but that's a big trouble spot. Maybe I should do it there, right? Maybe if this comes up and creates an up bar, I no longer want to be in the trade. Guys, don't be afraid to move your stops and targets. If your limit orders won't print and you have to do it, you can go, no, if you hit close, it's going to close both. Um, and at that point, you can flatten everything and re-enter with one, I suppose. But um, if your limit orders don't work, do you know how to, did you get in without an ATM strategy? So for example, did you get in like this with no stops or targets? Okay, so if I'm long, I can right click and sell. And that becomes it. So whatever the opposite action is of what you did. So if you go long and you don't have any stops or targets, I can go down to quantity one real quick and sell limit one. Now I have one target. And down here, I can go sell stop one. So now I have a stop in place, but I'm in two contracts. So I have to sell limit one again because that's the opposite of the buy. Does that make sense? So you can get all of these in place. Just change your quantity to one so that you can put them in individually. Cool. I usually get there eventually. Great question. That probably helped a few people. It's for every action, there's an equal or opposite reaction, right? So if you buy one, you have to sell one to even out, to flatten out. If you sell one, you have to buy one to even out or flatten out. Um, and that gives you the opportunity, yeah, to go, oh my gosh, I don't have an ATM strategy. That sucks. I need one. Um, that's okay, Bobby. We all get there in our own time, right? Cav said it was going down here, but went long anyway. I love it. 50-50, one divergence. You get in. You know that it may correct. Nice trade, Cav. I like it. Momentum for the win once again. Momentum tends to win a lot, guys. Momentum is amazing. It pushes a market in a direction. Pretty outstanding. And I think that's it for me today, guys. Good class. Great class. Proud of you guys. A lot of awesome questions, a lot of great opportunities. Um, Hopefully you guys learned something. Hopefully. Let me shut down YouTube.